For the last 25 years, I've been in real estate, which is my passion. Back in 2015, I started working in the family office space directly for several prominent families on their real estate portfolios. With 70% of families losing their wealth by the second generation and 90% by the third generation, I then realized that real estate would be the missing component for families, allowing them to maintain their legacy and mitigate how much wealth is lost for future generations. It was shortly after working for my first single-family office that I started interviewing successful real estate families and industry experts. These conversations, combined with my first-hand experience of working for families on their real estate investments and currently investing on behalf of families, that has allowed me to share this knowledge with other family offices, family members, and family office professionals so they too can be good stewards of wealth. I'm DJ Van Kuren, and this is Family Office Real Estate Insights from the Family Office Real Estate Institute. So welcome to another edition of Family Office Real Estate Insights. Today we are going to go down from the U.S. into Mexico, and we have Aldo González from Fenik Investments. Aldo, thanks for being on the show today.
DJ, a pleasure to be here. Thank you very much for the invitation.
So, we have here in the States, and we had talked about this a little bit more, everything that we're hearing about when it comes to Mexico has to do with the border and what's happening with people coming over the border and everything. But let's go the other way and let's just focus on not people trying to, leave where they're coming through, through Mexico or whatever. Let's focus on staying in Mexico and focusing on real estate as a whole. So Mexico, what is that? I've heard some great things about the opportunities in Mexico and what's happening there. Can you tell me a little bit about it from a first-hand perspective?
Yeah, sure. First of all, in the Mexico market right now, what's been happening because of COVID, actually, let's put it that way, is we know what happened with the supply chains all over the world. So right now, there's an effect that is happening right now in the country that is called nearshoring. Basically, a lot of companies from the United States are moving their factories from China all over the world to Mexico, specifically to the northern border of the country. And most of those companies are either tier ones or assembly companies like GM or other companies. And that's bringing in also a lot of companies from China, Europe, Asia to install their facilities here and have the whole ecosystem installed here in the country. Just to put in perspective a little bit of numbers, right now the vacancy of industrial assets in Mexico, it's below 2%. The vacancy is below 2% in the country. We've had an absorption right now of probably 50% of the assets that are under construction. For example, here in Monterrey, 50% of the assets that are under construction are already leased. So the effect that we're having right here in the country is really, really big. We've had increases of over 20% year on year, and a lot of capital is coming. Now, this is bringing a lot of capital to the country, and there's a lot of foreign capital that are already investing here. For example, Walton is a big investor in the industrial real estate here in Mexico. So that part right now is, let's say, that is the engine that is running the whole car, and that's bringing also a lot of investment on what is the housing market and the second home market in the touristic destinations like Los Cabos and Cancun and Puerto Vallarta that are the main destinations. So right now, the opportunity of investment in real estate in Mexico, it's growing really, really, really fast.
And is there any particular property type that is more opportunistic or that's readily available for investment?
Yes, there's two ones that are mostly the ones that foreign investors are looking in Mexico. And I'll tell you why after I tell the assets. That is the industrial asset and
Yeah.
the second home market into touristic destinations.
Huh.
Why? Because those assets, the investment is in dollars and the return is in dollars. So the parity exchange, the risk on the exchange rate is diminished. For example, I helped some investors from Canada did an investment for a project in Puerto Vallarta, Mexico. They did the investment starting on 2019, and we achieved an IRR above 20. And the whole product was sold in dollars. The whole investment was in dollars, and it was through the pandemic, so it was a really good one. And in the industrial assets, for example, 90% of the companies that lease the assets are companies from the United States, from Europe, from Asia, and the rent is in dollars. So basically, you're putting the equity in dollars, and you're having revenues in dollars as
Okay,
well.
so is that for any type of real estate investment in Mexico, or is it just these two types?
These two types. All the rest, for example, the housing market, the investment is in pesos. You can invest in dollars, but the investment, the cost of the sale is in pesos.
Okay, so why is it that these two property types are in dollars and not pesos?
Well, the industrial asset, because mostly of your clients are from out of the country, and
Okay.
because it's so institutionalized, that investment, and there's so many foreign investors in those facets that
Yeah.
everything's handled in dollars, right?
Okay.
And because the industrial assets, for example, here in Mexico, we are competing with Houston, Austin, San Antonio, all the border from the United States, all that
Yeah.
Sun Belt, the industrial assets are competing with them. And the second home markets is because you're selling them in touristic destinations like Los Cabos, Riviera Maya, that is Cancun, Tulum, and other destinations, and Puerto Vallarta. Basically, clients, even Mexican clients, are buying in dollars. So since it's a touristic product, it's sold in dollars as well.
So why not hotels? Why wouldn't hotels be done in dollars? I mean, it's an
Hotel,
institutional property type.
there is some good investments in hotels. We personally, we don't have that much expertise in hotels. But
Got
right
it.
now, for example, I can tell you that I've seen 3 projects right now that are being closed in Riviera Maya in Cancun,
Mhm.
and each of those projects is around 400 and 500 million dollars, each one
Yeah.
of them. So that
Yeah.
is really big as well. I always say that, for example, a lot of the United States, they know a lot of Los Cabos as a destination, but
Yeah.
us in Mexico, we don't know that much of Los Cabos. Los Cabos is a very good destination, but for Americans, but it's a
Yeah. Yeah.
very, very high end. There's a lot going on there in investments, but here in the market, we don't know that much about it.
Got it. Okay. So let's say families, their allocation are quite high as a percentage of overall portfolio. It's about 24% or so. This is that,
Mhm.
and then I even talked to a family yesterday. They have about 40% currently in real estate. I had lived overseas for a while, and so there was definitely differences in ways to do business within that country, and you really needed some of that local expertise. So is that this? What does that look like for a family that wants to go in? They want to build an industrial building, let's say in Mexico, and they're like, okay, this is great. There's dollars. What are the steps that they need to be aware of, um, and take into consideration? For potential stumbling blocks.
Okay, let's go step by step, right? And let's go to the first risk that I always put to any investors: entitlement, permitting.
Mhm. Yeah.
Here in Mexico, it's completely different than in the United States. I had the chance to work on a full entitlement of a project in Denver, Colorado. It
Mhm.
was a 3,000 unit project near Fitzsimmons medical facility. It was a pleasure working with the authorities in the United States. I mean, a lot of people are going to say that's strange, but believe me, being from Mexico and working with the Mexican authorities and then working with the authorities in Colorado, it was a pleasure working with them. It was a great process, but the culture is so different.
Yeah.
Uh, Also, on top of mind, everyone thinks that here in Mexico, everyone's corrupt and you have to pay money on the side and you have to do this. I've worked with a lot of foreign companies and foreign investors. And actually, I was hired by a Canadian company that was doing sustainable development here in Mexico. And the first question they asked me was, "Can we do a project without paying any bribes?" And the answer is yes, you can do that in Mexico for sure. The only thing you have to take into account is you have to follow the times, right? And the entitlement process is really difficult because in Mexico, when you do a project, it's not only the local authorities, but it's the municipality, the state, and the federal government. For example, environmental impact study for an industrial asset, you have to do with the local authority, with the state authority, and with the federal authority. You have to do those 3 studies. So it's a very complex process that you have to follow. You have to find the correct partner in Mexico that has done that kind of processes, that has the connections, that can help you speed up the process, that can tell you exactly what is the kind of the computation you need to have, what's the structure of the project that you can do, and what is it that you can build. Because that's something that happens a lot with a lot of investors come to Mexico and say, I want to build what I did in New York. Sorry, you can't. You can't do exactly what you did in New York. For example, we were looking at a company that wanted to come and do net zero homes in Mexico because they were doing net zero homes in the United States and Canada. Here in Mexico, regulation doesn't allow you to do net zero homes. Why? Because of the energy law that we have in Mexico. You can do net zero ready, but not net zero.
But do you have, like, we have zoning laws here in the States, and so it's pretty clear. You can try to say, look, we want to build this and we want to get it rezoned per se, right? But there's still pretty much guidelines that this is what you can and can't build. Is that the same thing in Mexico, or is it sort of you need to apply for whatever it is that you wanted to have done?
No, here in Mexico, you have 2 options, right? One is if you are in the urban area, there is a development plan from the municipality where it tells you what is it that you can develop, right? And then you have compatibilities where, for example, one very common that we use a lot is certain type of horizontal housing is compatible with light industrial. So if you suddenly buy a property that in the zoning says that you can do horizontal housing, it can be changed to light industrial, that is logistics and minimal processes. And then you have the option that you're buying a property that is outside of the city and is not zoned. And then you have to follow a process through the federal government and then through the municipality, but that's a longer process and it's a little bit different. And but yes, we have that zoning. Some cities here in Mexico and some municipalities that have a really good plans. For example, here in the city of Monterrey, where I'm located, our urban area, we have around 6 municipalities, and each one has a different development guidelines. So you have to follow each one, right? So suddenly, the thing is, in each municipality, the process is completely different. So suddenly,
and that has to do with the timing it takes too. Then
normally, what we recommend to every investor is if you want to do a project and you want from start to finish until you can put shovels on the ground, is between 18 to 24 months.
Okay. All right.
18 to 24 months. That's not taking into account the first months on structuring the legal structure and the investment structure and all that. Once you start planning the project until you can start shovels on the ground, that's between 18 to 24 months.
Got it. Yeah, which is similar, obviously, for timing it takes to do here as well. What about the local companies that are doing the construction? I'm assuming that they probably similar to the States where they're going to you've got some great companies, you've got some that's more challenging, but you're still going to have to deal with some of the nuances within Mexico, right?
Yes, there's some good companies. Actually, there's some really good companies from the United States working here in Mexican construction. One of them is, for example, Beck Group. Beck Group is very well established here in Mexico, doing a lot of the on hotels and second home market for the touristic markets. They're doing a lot of that. They're very well established. There's other companies from the United States that are doing a lot of construction. That's key. You got to find the right partner on that side. and you have to find the right internal team, because your team inside can give you the wrong recommendation. For example, here in Mexico, we're very used to divide our contracts with trades, and suddenly you have 10 contracts, one for the groundworks, one for the structure, then one from the ceiling. You do a lot of that here. I like personally to work with a GC that gives you a full service, right? And it gives you the full service, including entitlement as well. So I always tell all my clients is, you have to invest around 6 months in planning which ones are going to be your partners in every project from start to finish. Who's going to help you? Who's going to get involved, and how they're going to get involved, and how they're going to help. Finding there's really, really good companies in Mexico that you can partner with, and you can create some really good long-term relationships.
So from families that are, have monies that they want to invest into real estate that are from Mexico, are they putting dollars into Mexico or into other places like the US? Or is it a pretty even mixture? What's the settlement from families, Mexican families, and those opportunities both in country and abroad?
That depends a lot on the geography. Okay, on the real estate side, a lot of the family offices in north of the country, specifically in Monterrey, because we're so close to Texas. I mean, you can take the highway, and we're 2 hours from McAllen, Texas. That's it, 2 hours driving. I can tell you that I know a lot of family offices that are doing probably, let's say, between 30 to 50% of the portfolio in multifamily assets in the United States, or in industrial assets in the United States. So, I mean, there's a really big culture of investments from Mexico to the United States in the real estate side here in Monterrey. And they do a lot of investments here in Mexico, but they're focusing more on condominiums and housing rather than the industrial. There's some that are trying to go in the industrial, but they're focusing more on the housing market and the commercial as well.
And is that because they're looking to diversify their funds from Mexico into other areas outside of the country?
Right now they have a lot more confidence in the multifamily for the last let's say 4 to 5 years. What's been happening in the United States, so the returns on cash and cash for them are really good from what we're seeing in the market right now, and they're doing that also because of exposure. The exchange rate in Mexico, what happens with exchange rate, suddenly goes too high, suddenly goes too low. So for them, having those returns in dollars, for them is really good. So that way they diversify the portfolio, and a lot of them have visas from the United States, and they can go and live in the United States. They also do a lot of investments to look for that investment visa and have the ability to go and live in the United States as well.
Gotcha. And what are you seeing about the other way with families that are coming into Mexico for those opportunities? Obviously that's different than an actual real estate company wanting to come in. And I've talked to a number of companies that have, looked to go into Mexico as well. But is there anything particular that you're seeing about what's drawing people to Mexico, or if it's increased, decreased, stayed the same?
It's increasing. Why? Because of the effect of Nearshoring. One thing that I tell every investor that comes from the United States and Canada as well. I was working with a family office from Canada that wanted to come and invest in industrial real estate in Mexico, and they had this idea of the market in Mexico. And I told them, look, the industrial real estate in Mexico is the most Americanized asset in the country. Why? Because the investment is in dollars and your income is in dollars. So the exchange rate risk is basically gone. The exchange rate is more on the construction side, but 70% of your contracts on the construction side are in dollars as well, because a lot of them is the structure. So the risk on that market is really, really small. So a lot of private investors are looking this way for that kind of investments, but they're having a lot of troubles on finding the right partners. Either they find these big institutional vehicles that say, okay, put the money on me, and I'll invest in Mexico, and they don't get the knowledge. They don't get to know what is it that you have to do, right? So right now, for example, one thing that we're doing is basically we are approaching those companies to say, hey, you want to do a more direct investment? We can help you. We have the platform, we have the connections, we can create the vehicles, and we can help you operate the vehicles as well, because that's one thing that we like to do. We like to create a team for each of our clients and help them do an investment in my country, in our country, right? And still have good returns. I can tell you very, very comfortably that, for example, the industrial real estate in Mexico, you're talking mid-teens, 20s on the returns. So it's a really good asset. And right now, for example, cap rates on the sale, we're talking about 7.75 here in Mexico. The cap rates in Mexico are very different than the United States. But for example, here you're renting on a cash and cash of 9.5% and above. So it's 9.5% and above. And that's on an asset that is only on the shelf. If you have other TIs, your cash and cash can actually be higher.
Really? That's interesting. So do you have to, I know in some countries that you have to have a partner who's 51% owner. Is there any restrictions like that in Mexico where you have to have a partner, or obviously you want to have a partner, but is it required to have a partner?
No.
Okay.
Let me put it this way. I used to work with the Canadian company, the development company that I used to work with. Our main company, 99%, there were two companies. One owned 99%, and that's a Canadian company. And then another 1% was owned by another company. What is it that needs to happen? For example, the company was created by a Mexican partner, and then the shares were transferred to this. Yeah. So basically, you sold the shares once it was established. The only thing you have to do is you need to get a permit for foreign affairs. That is really easy, and that's it.
Because one of especially after my time in Vietnam, it was obviously a different time period when it was really in the developing phase. But one of the biggest things of many that I took out of that whole experience is that the importance of having a local partner. I mean, you really do. You have to have a local partner that you can trust. That's the first and foremost, because what's going to happen is that person or that partner is then going to be able to identify the other local parties that are involved, if they're good, if they're legit, if they're trying to pull one over right on your eyes and stuff like that. And there's definitely cultural issues that I think are a lot more important than people realize on many fronts. And that's also how you do business, right? Because it's done differently in different parts of the world. And even though, Mexico isn't as abstract as some other countries around the world, there's still definitely differences and perceptions even, right?
Let me put it this way. It's not only that you need a local partner that knows how to handle himself in the country, in the market, but you need a local partner that can educate you and help you on that side. Because like I said at the start, there's a lot of companies that want to come and impose the way they do business, and business here are different. So if you find that right partner that can communicate with you on how is it that you can do your business here, then you have a winner. That's the best way. You can find that partner where you can put the trust in you, and that he understands what is it that you're trying to achieve, and that he can adapt what you're trying to achieve to the local market. Then you have a winner. That's very important, because like I said, not everything that you do there can be done here. So you need to educate yourself that the investment is going to be different. For example, here in Mexico, we don't do everything on LLCs, for example. A lot of the investments, for example, are done through trusts. It's one of the preferred vehicles that we use here. We do a trust, and everything's handled through a trust. Why? Because the trusts give a lot of security to the investors. And then you have all the risks are within the trust and not outside the trust. So that's one particularity here in Mexico, right? And then learning as well how the financing world works here in Mexico. For example, here in Mexico, you can do a lot of what you do in the United States. You can lease your asset and then get a financing on that contract. And then you can use that money to build the next asset. And you're getting rates, let's say, SOFR plus 2.5.
Wait, go back to what you just said. Go back to that, what you were saying.
Those are the magic of trade here in Mexico. Let's say you're doing an industrial development, right? And you build the first asset. It's a 200,000 square foot facility. And you rent it. And I'm going to do the numbers really fast on my phone. And you rent it at rents here in Mexico are a little bit different than the United States. Let's put an average rent like here in Monterrey is 200 square feet, 65 cents a square foot. That's you're talking a monthly rate, a monthly rent of 130,000 a year. You're talking around $1.5 million in income. And then you rent it, and then month one's come, you get the first rent. You say, you know what? I'm gonna get a long-term financing on the contract. So you go to the bank and you say, I want to get a financing. So they'll do a value calculation of value of the contract. They'll put a cap rate. Let's say that 1.5 at a cap rate. Let's go high right now. Let's put it at 9%. So they're going to value that contract at $17 million. They're going to tell you, okay, I'll give you a loan of 60% of that contract. That's $10 million. I'll give you amortization of 20 years. And what we'll do is from the rent, I'll take 70%, you keep the 30%, and I'll give you $10 million right now. So what you do now is you have that loan secured with the rents from the asset, and those $10 million, you can use it for the next asset as well. So that's how you build a portfolio. So it's basically the same way that it happens, for example, in multifamily in the United States, that once you have everything rented and you get a mortgage, a long-term mortgage, it's the same, but for industrial.
You can refinance and take the additional monies to go to
then you refinance that money as equity for the next asset that build your portfolio, and then in 10 years you sell the whole portfolio to REITs or IBRAs or
how difficult is it for a foreigner to get a loan in Mexico?
It's not that difficult. I mean, basically the loans are actually in dollars as well for these kinds of assets.
Are there personal guarantees they have to have or anything like that?
The guarantee is the same contract. For example, that kind of loan, the contract is the same guarantee, and the corporate guarantee of the one that is renting the asset. Those are the kinds of warranties. For the first, let's say you're an investor and you're doing your first assets in Mexico, the first ones you're going to have a higher interest rate, and you're going to have a lower term because of the trust and because you're a new guy in the market here in Mexico. But as time goes by, the conditions are going to be a lot better.
What's the current interest rates?
In dollars, we're talking some 4+. Let's say a good for institutional investor, they're getting like 225, 275. So 4+, 275 basis points.
All right, so pretty similar to what we're talking about.
Very similar to the United States. Yes, that's why I say that industrial is the most Americanized asset in Mexico that we have. I mean, we have some very big investors here in Mexico on the industrial one, like, for example, Walton is a big one. Prudential is another big one. BlackRock, through a company that they own here in Mexico that is called CPA, Corporate Properties of America. I mean, you have very big institutional investors here in Mexico that have a lot of money invested in those kinds of assets.
And you can be, as a foreigner, you can be on title and on the land and everything?
Through the trust. That's why
that's one of the reasons for the trust.
If you're investing as a foreigner, you have to do it through a trust. But if you build, if you create a national company, I mean, through the company.
Very interesting.
Yeah.
All right. So what I'd like to, this is absolutely fantastic. I mean, it's, with what we have, like I said, I mean, the opportunities, and I've heard this before about some of the opportunities in Mexico. Of course, we've been just humming along here in the States for quite some time. but it doesn't mean that there's not other opportunities in other parts of the world. And obviously, having a place so close to the States is that actually absolutely huge. What I'd like to do, Aldo, is actually have you back on and dive a little deeper into this as well. I mean, I think some of the biggest takeaways is one is the opportunity of Mexico, but two, the importance of having that local partner. And I think you can't emphasize that enough, because that not only will it help with some of the headaches, but it'll also speed up the process. And at the end up with you should end up putting more money in your pocket because of the return that
exactly. I
put
mean,
together, right?
reducing your risk, reducing your exposure should be priority number one. And the only way to do that is through partnerships. Finding the local partner that has the network, that has the knowledge, and that you can have trust with, right? That's the main thing. If you find a local partner and you don't trust him, don't do business. First, it doesn't matter how good network he has, how big is it, how much experience. The first thing that you have to look at is trust. How straightforward they are in the comments. What is it that they tell you can and you can't do? I know of a lot of companies that they don't tell you what you can't do in order for them to have the business. But if you find that partner, just keep him, because here in Mexico, we really like long-term relationships and partnerships with all our clients.
Yeah, which also coincides with families, right? They're all about long-term relationships and everything else, and also being opportunistic and whatnot and things like that. So, Aldo, thank you so much for being on the show today. I do want to have you back so we can talk more, obviously, about this, because it opens up just a whole through of questions and thoughts that I have. But, when you hear Mexico and you hear real estate, you definitely, from my perspective, one of the big takeaways I've taken is that you need to keep your mind open and your eyes open, because there is some opportunity there, and actually some opportunity that is takes out some of the risks with the certain properties being done in dollars, right? I mean, that's something else, because everybody else automatically thinks you have the currency risk and everything else. If you take that out of the equation, that's a huge part right there. And with a 2% vacancy rate, that's obviously shows that there's a big demand.
Yeah, exactly. Just on those numbers, let me put it on a perspective. Right now here in the city of Monterrey, there's 90 buildings being built, to approximately, let's say, 200,000 square feet each building. So we're talking about 18 million square feet being under construction right now, okay? From those 90, 60% are already rented.
Wow.
So they haven't been built and they're already rented. So you can imagine what's happening in the market right now. Everything's going really fast.
I think that pretty much says it all. So,
exactly.
All right, Aldo, Fenik Investments, thanks so much. Let's circle back on this, and thanks for being on Family Office Real Estate Insights.
Thank you very much, Lindy. You have a great day.